Hi everyone, I'm Kieran Clare, journalist with Australian Property Investor magazine, and today we're talking with Sasha Hopkins, who's an investment advisor with Open Wealth Creation. Now Sasha's a mate of Kosta Maltaris, our young gun, and he's also a pretty keen investor himself, so we'll have a bit of a chat to him today about young investing. How are you going, Sasha, and thanks for joining us.
Excellent, Kieran. Thank you for the opportunity.
No problem at all. No problem at all. Now, talking about young investors, when they decide that property is the way to go for investment, what are some of the initial steps you think they should take towards building their portfolio?
Good question, Kieran. First and foremost, 100% education. So before jumping into anything, everyone needs to educate themselves. What I did personally was read as many books as I can, subscribe to property magazines, attend some information seminars, make sure you don't get conned into buying anything though, and ask people that are in the property industry as many questions as you can. Okay, it doesn't matter if you're annoying, but the more questions you ask, the better. And then when you are feeling like you're in a position or ready to take that first step, definitely seek professional help or guidance. The biggest mistake that people make is that when investing in property, they think it's simply about buying a property or investing in a property, not actually investing in a system or a strategy, and then also a service that can, I guess, accompany that strategy and make sure that you keep risks to a minimum.
Well, look, buying that first investment property is often the hardest step. Any ways that you can easily identify where your first property is going to be or what it is? Do you have a checklist or a criteria?
Yeah, definitely have a criteria, and this is exactly what we teach clients in terms of the criteria that we follow. So look, in general, people can spend days, weeks, months, even years trolling the internet to try and find that perfect investment property. Now, we actually use a process of elimination. Okay, so being able to weed out all the bad properties to be left with a handful of good properties. So in reality, you can find the perfect or the right type of investment property any day of the week. And that process is called MAP, Market Area Property. So it's where you identify the best capital city market that makes the most sense to be investing in right now, based on the undersupply of housing, population growth rate, increase in sales activity, consumer confidence, affordability, all that major stuff. And then looking in the right area in the market, again, for undersupply of housing, population growth, infrastructure, and then the right specific property for that area that suits the demographic and will be the best long-term investment.
Right. Now, once you've got a couple of properties under your belt in your portfolio, are there things that you really need to keep an eye on, try and monitor?
Yeah, definitely. So always should keep a little bit of a checklist and be up to date with everything that's happening in the portfolio. It's easy to let things slide or to forget about things. But I'd always be monitoring the market for all my properties as often as I can. The values, if they're rising, if there's any potential equity available, get your properties valued at least once a year. Making sure that the rents are in line with this fair market rent. Interest rates, have they dropped? Can you get a better rate? Making sure that all your expenses or outgoings are correct. Can you get cheaper insurance elsewhere, whatever it may be? And most importantly, ensuring that the property managers that you're using are actually doing their jobs.
Now, while Kosta's our young gun this time around, you were our young gun back in April 2013, and I have my own keen interest in seeing how you're going because you were actually one of my first interviews when I joined API magazine. How have things been?
Yeah.
Yep, that's right. How have things been progressing for you?
Actually really well. So finished the first development, which consisted of a renovation to the front house and then building 2 double-storey, 3-bed, 2-bath townhouses in the rear. So basically they're all separated onto 3 separate titles, now tenanted, achieving positive cash flow from the rent, and also should have about 140K of available equity to purchase the next property. I haven't actually had them revalued. That was just on the standard or the initial bank valuation, so hopefully a little bit more. But next purchase, I've been sourcing and looking around in Brisbane. I'm very, very keen to buy the next property in Brisbane.
It's terrific to hear. I mean, it was a very impressive story when it came out, and it's great to see that that's going forward for you now. And maybe looking back on when you did start out, what's maybe something you wish you'd known then that you know now?
Okay, so I wish that I understood or took more time to want to understand the risks associated with property, and also seeking, expert advice or more of it. So when I started, or when I'm looking back now, I thought I was invincible. Rushed into something, didn't evaluate the risks. Now I'm pretty fortunate to be standing here because it could have gone quite wrong, but I was lucky enough to have the right mentors to assist me along the way, and knowing what I now know, I'm going to be ensuring that I'll be keeping risks to a minimum and actually eliminating them up front before ever committing to doing something. And that's exactly what I teach people on a daily basis, to learn what the risks are, and be able to get them to a minimum, and still achieve the result that they or that we want to. And look, trying to do it yourself, it takes too much time, okay? And it's where 99% of people make mistakes and they'll end up losing money.
Well, Sasha, it's been a good story for you and a good one for Kosta. And the advice is always valuable, particularly for those starting out. So thank you very much for giving up your time today to have a chat.
No problem, Kieran. Thank you for the opportunity.
Look forward to speaking more in the future.
Cheers, mate.